Welcome to Drill Down Earnings. We have the latest quarterly results from Lumentum. It's fourth quarter results, fiscal fourth quarter for them. This is the business story behind the stock on the move. The stock is indeed moving. It's going up. Why? Well, let's dig into it. I'm the chief market strategist for the Futurum Group. This is what I do. So we look at Lumentum's fourth quarter numbers. Was it a beat or a miss? Yeah, it was a beat, but the estimates were really low. Lumentum told people the numbers are going to be low. The earnings would be a loss. In other words, no earnings. The revenues would be down. So by delivering a slightly better than that, it's important to note that the decline continues in revenues for this company, down 17% on a year-over-year basis. Now, this is a company that makes the stuff that connects data, moves data from one place to the next, using lasers in a fantastic way. And you'd think they were getting great business out of AI. Indeed, they talked about broadening their cloud and AI customer base and how they're making progress with that. But the progress isn't made yet. So the numbers they reported weren't great, but the guidance they gave was much better. So let's look a little bit deeper here. So as they pursue this AI business, they're also clear out some other businesses. They're taking losses. They're taking operating losses, not just other losses sort of below the operating line. Negative 43% operating margins. Now, at least 10% of that was a restructuring charge, but still, these are losses, real big losses as they chase after AI. Their cloud networking business is 83% of revenues in this the quarter they reported today. So most of the business is cloud. The industrial technology business is real as well, but the cloud networking business driven by AI isn't going great right now. Significant declines on a sequential basis. But again, they talked up a pretty good game in the conference call. I'm gonna get to that in a second. But by chasing this AI, even within the cloud networking business, they're seeing their operating margins shrink from when they were nearly 30% 2 years ago down to 10% right now. Now their industrial technology business seems to have leveled off. It's not a lot better, 2% isn't a ton. They'll take it right now though. The business is starting to get better. Let's talk about some of the things we learned here. So they talked about their orders for datacom chips that use data center applications are doing quite well, and that they're, again, making significant progress going after cloud and AI customers. So they say they're going to say accelerated growth. Look, any growth is accelerated when you're shrinking. And that guidance, they have actually some hard numbers for next quarter that showed that we're going to actually have some growth, and the stock reacted. Furthermore, let's talk about the cloud and networking business. So they got a major transceiver award with a new customer whom they did not name. And they say they're close to some awards with some other customers, that they booked a record number of orders for their externally modulated lasers, EMLs, with some leading AI customers, but not directly, but through their supplier clients. So we're going to keep an eye on sort of the supply chain there as well. And they had that even in this quarter, there are 100G externally modulated lasers. I can't say that. That's why they say EML. They had record shipments in the fourth quarter. Their 200G EMLs are going to be selling throughout the next year, they say, and they're working through their inventory. Their days of inventory, a number that I track in my financial models, was still a lousy 154 days, but that's a lot better than it was last quarter, and even about equal with what it was the quarter before that. So inventory is starting to get better at the company. It's getting better at their customers from what we understand. And they're telling us that next quarter, the industrial tech segment's gonna be flat, that the cloud networking segment's gonna be up on a quarter-over-quarter basis. And so things get better. There was some stuff in this quarter, a lot of financial junk that matters, and not least of which is a $140 million adjustment in their taxes, which really hurt their earnings for the quarter. And they also got rid of their coherent digital signal processors and the radio frequency integrated circuits businesses, and that led to maybe $50 million, more than that, in write-offs in the quarter and getting out of some of those contracts. So how did the stock react? Well, in after-hours trading, the stock went straight up because the news of the guidance is so good. Stock up 19% in after-hours trading. And that's after losing for the year, 10% for the year. So 19% in after-hours trading, down 10% going into that for the last 12 months. So a real turnaround of the fortunes reflected in the stock price. Here's what the CEO, Lumentum CEO Alan Lowe, had to say.
There is still inventory in our customers and beyond. I'd say we've seen strength in products that we weren't shipping a year ago or 2 years ago during the pandemic. And so therefore there's no inventory built up of these products. So the 130 gigabaud coherent components, the 200 gigabaud coherent components, are just starting today. And then there's our new ROADM products that we weren't shipping a year ago are seeing strong demand in our integrated C+L, as well as new and differentiated high port count WSS. So that's kind of what we're seeing. We are seeing, strength in the narrow line with tunable lasers, as that has, I think the data center interconnect business has burned off a lot of the inventory, given, people are having to place data centers further apart and no longer can connect them within a campus because of the power requirements. So I'd say that's in general what we're seeing, the strength in telecom.
So Alan Lowe making the case for Lumentum's place in the world of cloud data and AI data. But what's it all mean? What's one number to take away from this quarter that really tells us where this company is sitting right now? I'll have the drill down earnings bite right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Lumentum, just reporting fourth quarter earnings. Here's your essential summary, the things that you absolutely need to know. $308 million in revenues, and they lost a ton, 43% operating losses, even worse on a net income basis, and a 17% decline in revenues on a year-over-year, on a sequential basis even, or on a year-over-year basis, I should say, 17%, not good. But the one number that means a whole lot, the drill down earnings bite, was this sequential change last quarter over the most recent quarter in their cloud networking business, selling into AI and data, down 19%. That's bad. They say it's going to be actually up next quarter. Look for a big reversal from Lumentum. All right, thanks for listening to Drill on Earnings. I'm Cory Johnson. And of course, you can check me out on X at Cory TV. You're surely enjoying this YouTube channel at 6.5 Media, but you can go on and check us out on TikTok and Instagram at Drill Down Pod. Lots of people are. You'll be in good company. Leave us some comments there. Tell us what you think. Drill on Earnings, part of 6.5 Media.